Welcome to the State of the Nation Business, brought to you by Corion Capital. Very excited to be introducing something new to our State of the Nation community and our channel, and that is a closer look at business and the markets over the last month. And we're going to kick off today by welcoming our guest, David Bacher from Corion Capital. David, welcome to the State of the Nation. So good to have you with us. And we're going to have a look at your report. And for those people that aren't familiar with the Corion Report, you put this out on a monthly basis, which is a look at how things went in the last month. And we're just going to dive a little bit deeper into the report as you've just done for the report for June. So let's get stuck in here. David, for starters, it was quite a good month for equities, right? Especially South African equities in US dollars, up 3.8%. Tell us what brought that on.
No, indeed it was. I think investors in South Africa, when they get their valuation statements from their providers and their provident funds, will be happy. South African equities, as you said, were up 3.5%, but global equities was up even slightly more. And, we at Corion have been thinking about, in the face of what we've been through and all the geopolitical uncertainty, what has been the driver. And I think the main driver has undoubtedly been easing of inflation and inflation expectations. And this ultimately leads to the potential for further rate cuts, and decrease in interest rates are good for stock markets. And I suppose in addition to that, that tough tariff rhetoric that was coming out of Washington seems to be a little bit more subdued and a little bit more tempered. And that uncertainty around global trade, has given all the decrease in uncertainty around global trade has certainly given markets even more reason to calm.
Yeah, well, it's certainly nice to see South African equities up, but it wasn't just South Africa, because globally equities were a little bit better, 4.5% globally. And I presume it's the same reasons, just the lowering of the temperature when it comes to tariffs. The fact is that the world economy continues.
Right. I mean, you must bear in mind that, when we go through this report, it is a report just for the month. And the month is a very short period for looking at investments. At Corion, we take a long-term view. And if you go a little bit further and you look at the returns year to date of the South African equity market versus the US market versus other markets, and, we have done well. We've done well for, I think, two reasons. Firstly, our valuations were quite low relative to certainly the United States. And also what has been a big driver for our market has been our gold shares. Our gold shares have really rallied on the back of a strong gold price. And our all-share index is about 13% weighted to gold.
Now, we're going to go into these commodity moves because that was really the story of the month. But before we get there, let's have a look at some of the currencies, because we've had US dollar against the euro. The US dollar seems to be a bit of a poor performer at the moment.
It's absolutely unbelievable what's happened to the dollar. The dollar has lost almost 11% against its major currencies or basket of currencies. So, that's the worst first half of a year for 40 years. And that's a massive depreciation for any currency, but a currency that accounts for almost 90% of global trades and transactions, that's a defining event.
David, the story with the US dollar, there was a school of thought saying that it might be part of the strategy of Donald Trump to actually weaken the dollar, to knock it off its pedestal as being the global reserve currency, because that was driving up the US debt. Do you think there's any truth to that? Do you think this is part of a bit of a plan to weaken the dollar?
At Corion, we certainly do. I mean, Donald Trump ultimately has been, crying foul about how other countries have been depreciating their currency. A weaker dollar means that their goods will be more attractive to foreign investors, etc. So we think is part of his strategy. We think the recent attacks on the Federal Reserve Chairman Jerome Powell is part of that strategy. From our side, we think those strategies will age badly over time. But there's no doubt in our view that Donald Trump wants a weaker dollar.
He wants a weaker dollar so that people will be more inclined to buy US products. That's one part of it. And also perhaps, not make the US bonds so attractive, because in an ever strengthening dollar environment, those US bonds have been for the last nearly 50 years ever attractive, because you know that the dollar is going to strengthen. Is that the sort of logic?
Correct, but that is a logic. I think it's a bit more complicated than that, and we're also trying to get our minds around it. So certainly, he can control short-term rates. In other words, he can put an attack on the chairman of the Federal Reserve to lower rates, but that only lowers rates, over the short term. What the bond market does, it takes a much longer view in terms of what that will mean for inflation, what that will mean for the cost value of money, etc. So yes, he has control over the short-term interest rates, but ultimately, current companies and countries lend money over the longer term, over 10 years, 30 years, and the inflation market and the bond market, work hand in hand. And if the bond investors think that those policies are going to lead to increases in inflation over the next 10 years, well, that doesn't necessarily mean it's going to drive down the long-term rate at which these countries borrow at. And that's actually what you're seeing at the moment. So the long-term rate in America, or the 10-year rate, is still at 4.3%. That's higher than when Trump came into office. So whilst he has been successful in weakening the dollar, he hasn't been successful in actually decreasing the long-term rate at which America has to borrow money.
Well, that's one we're going to have to keep an eye on, because there is no doubt Donald Trump has been all about many things. On the financial side, it's been about doing something about the US deficit, which sits at, I think, $36 trillion at the moment. And the way it's going on, it looks like it could add another 3 to that this year, which is crazy. It can't last. The best performer of the month, if one's looking for the star performer, and I know that this month the Corion Report, which I always find a wonderful spin on this, has always been the theme for this month has been South Africa's Cricket World Cup victory. So you'll see a lot of cricket comparisons, but our best, the man of the match in the last month has been platinum, up a whopping 38%, $1,350 an ounce. Why is everybody in love with platinum, David?
Sure. Firstly, it's unbelievable. The fact that our platinum price can soar so much in just a month is astounding. I think the main reason why the platinum price has increased has been because of supply constraints, and there's been a thought out there that the amount of platinum in the market coming from the producers is going to be less than expected, which obviously drives prices up. Also, a weaker dollar does sort of create more demand. Obviously, when you're looking at platinum and people are buying something that is based in dollars becomes cheaper, then demand can also be stimulated. So it's those two reasons, but an unbelievable outcome for South Africa. South Africa relies heavily on a good commodity price, and platinum in particular. It supports thousands of jobs, it drives export earnings, boosts our tax revenue, and ultimately strengthens our trade balance. So a great result for South Africa, and also, maybe potentially a reason why our rand is trading where it is, over the last few days.
And still good for South Africa, and that has been, and I know you've tracked it, this move in the gold price over the last 3 years, which has been nothing short of breathtaking in dollar terms. 2003, it was at $1,900 an ounce. 2024, $2,300, and now it's $3,300. I mean, these are sort of numbers that we can only dream about.
100%. When you're managing other people's money and you're making quite a lot of decisions, you always think about the decisions you made and the decisions you didn't make. And fortunately for our clients on the whole, we've done really well for them. But looking back, we had a industry expert come and present to us 3 years ago on his view on the gold price, and he cited the US deficit, the fact that there will be inflation, etc. He actually laid the roadmap to us And things have worked out pretty much exactly as he forecasted. In an environment where you have a weak dollar and fear about inflation, etc., gold is deemed one of the best hedges to that kind of environment. And as a result, you've seen that gold price increasing threefold in a number of years. So, fortunately, we did listen to that person a little bit, but certainly not as much as he wanted us to. So, yeah, that was a bit of a defining last few years of what could have really, really gone right for a South African investor if you had overweight that precious metal.
And David, I know that, South Africa doesn't have the number of gold mines and mining activity that we should have. We've had a minister of mining who's a bit unfriendly towards mining, which is sort of quite crazy to imagine, but must make it quite difficult for asset management company like yourselves to get exposure to gold and platinum, these kind of movements. How do you achieve that? Corion Capital.
Well, there's still, there's a problem as an investor in South Africa as a whole because your number of counters that you can invest in, be it gold or non-gold, has reduced dramatically. I think probably about 10 years ago, there were about 660 listed companies. Now there's, I'm guessing a bit, but I imagine around 220 listed companies. So your opportunity set as an investor in South Africa has decreased. Fortunately, we can invest a large portion offshore. But specifically to answer your question, in terms of the gold sector, we still have very liquid, large companies to invest in South Africa. We've got Anglo Gold, Goldfields, Harmony, etc., to be probably those are the top three. But you've also got some junior miners. So you still got your entry point, which are liquid. So I don't think there's any excuses from a South African investor who didn't have exposure to the gold sector. That wouldn't have been driven by structural issues. That would have been driven by their decision not to be there.
And lastly, rounding out the commodities, we got Brent crude oil price, which has sort of looked like it went up to the top of the hill and then turned down a little bit throughout the month. We saw it at $61 a barrel, 64, all the way up to $75. And now it's around the 66, 67 mark. Do you think with all of the activity in the Middle East, do you see this price now a bit of stability? Seems like the bombs are calming down.
It's hard to call something that's so dependent on supply that is, quietly constrained by OPEC. And then there's also the geopolitical risks, which, is hard to determine what will happen and when it will happen, if it ought to happen. So that's a hard one for us to really pinpoint with great certainty. What we do know is that, the world's dependence on oil has decreased over time. So, in the 1970s, there were about 44% of primary energy supply. That has decreased to about 31% at the moment. So, it's not as big a impact into the global supply, but it's still, it's still a third. So it's still very, very important. So, understanding what the impact of a moving oil price is on investments is actually important. So that's why you saw Sasol go through the roof. And oil is generally bad for markets because it acts like a tax on growth and corporate profits and impacts consumer spending. But from a Corion perspective, it's not something that we really, think we're experts at trying to predict. We think it's a hard commodity to get consistency right.
Yeah, and one would imagine if we've seen the startling performance by the US as becoming now the world's biggest oil producer, largely because of fracking, and we do know that we're sitting on top of some massive fracking reserves in the Karoo, which has been held up by environmental issues, but I don't know how much longer we're going to sit on that wonderful asset, because I think that could be one way out of the poorhouse for South Africa. Unsurprisingly, when one looks at the best performing shares over the last month, top of the log is Northam and Impala. Both of them are heavily, those are platinum mines, so one can understand their prices going up by 26 and 23% respectively. That's obviously there. But what I did think was quite interesting was Reinet going up by 18.2%. Now, for those that don't know, that's kind of the old Richemont, which really has investments in luxury products in Europe, based out of Europe. What do you put their performance down to, David?
Yeah, so there's been a bit of changes in terms of their structures. Reinet and Richemont moved quite far apart over the recent years. So Reinet has really got a big holding in an insurance play in the UK called PRC, not to be confused with our PRC, and also had a large holding in British American Tobacco, which they sold towards the end of last year and is actually sitting on a large cash pile. But the reason why that share price has increased so much is due to the talk of corporate action. There's been a lot of market talk that they've been made an offer for that PRC business, which could potentially result in a formal bid and also an unbundling of what is at the moment a deep discount to the NAV. So the company actually did confirm that those talks are underway. They said that at very early stages, but when you have announced the market that they are in talks, obviously that's going to drive up the share price. So that's certainly has been the driver behind that share.
Do you think there's still momentum in that share?
It's one we're watching really closely. Fortunately for our clients, we've got in the Corion equity fund, it's actually our biggest holding. So, it's nice to be reporting on something that's worked well. It's not always the case. That is investing. But we spoke to some of our industry experts on that, and they still think that there is a significant discount to NAV, and at the end of the day, if they value what they think is right, they do believe that there's further upside, but there's always deal risk. The value of one is not necessarily the value someone else's places on, and so I think if the transaction goes through, there is further upside. But when something is announced, there's significant deal risk, as I said, and also I think the management of Reinet at the very, very early stages of discussion. So, but we're holding on to our position, and I think that should answer your question.
Okay, well, if you're holding on, then maybe people should consider there. But obviously, we have to look at the other side as well, because we know what went up, and we've discussed, but there were a couple of companies that all went down, and they all find themselves in the same sector. Woolworths, Mr. Price, Pepkor. The plight of the South African consumer is, I suppose, what this is telling us. David, the South African consumer, despite slightly lower interest rates, still under enormous pressure.
I think you've hit the nail on the head. That's exactly what it is. There has been sluggish economic growth and persistent food inflation, and that is placing pressure on consumers. I think another thing to bear in mind is the Woolworths and Mr. Prices, they are sitting at valuations of about 15 times, which I wouldn't say is expensive, but relative to, let's say, bank shares, which are trading at valuations half as expensive, then you can understand why, another reason why that part of the market probably underperformed.
Yeah. Don't know what's going to bring back consumer confidence in South Africa, but it looks a long way off at this point. There's nothing that we can look at, because rates have been cut a little, not exactly too aggressively, but we need greater economic growth, that's for sure, before those shares bounce back, or else they're just going to keep on getting cheaper, one would imagine. But at least we did see something, some of the asset classes that were written off. The bond market up 13.4%. Equities largely driven by those commodities, but it's the bond market up 13%. The reason there, David?
Yeah. So I think in this graph, while we use the cricket analogy through this period, is what we're showing there is the 3-year percentage return per annum. And if you go into the Proteas cricket team in the ICC Test Championships. That's over a 2.5, 3-year period. And, it was a remarkable victory. And it was also, in our view, a remarkable period for South African asset classes, because both of them were underwritten, both of them no one gave it hope to, and both of them really showed resilience and bounced back. So, from our side, there's a few lessons to be had, and the one is, sometimes the best returns, whether in exportable markets, can come from those that you underestimate and those that offer value. And our South African asset classes 3 years ago, everyone was talking about the S&P and why invest in South Africa, and there were very good reasons why people were concerned. But at the end of the day, everything is at a price, and when you're having a market that is priced for such risk and uncertainty, it can often be also a very good investment opportunity and of great value.
Well, if anybody can make the link between cricket and investing, it's somebody with the surname Bacher, a well-known cricketing name, and now a well-known investment name through David Bacher, the CEO at Corion Capital. David, just lastly, how do people get hold of this report if they want to find out more or find out more about Corion Capital?
You can visit our website. We have reports that have become very popular in the marketplace. We have 8,000 subscribers to our Corion Report. So you can just log in there and go into our Corion Decodes section, which will give you access either to the report or to a daily WhatsApp function that we do, just to give people highlights of the market, what we try and do at Corion. And, we understand that investing is often complicated, a lot of jargon, and we try and simplify that in a manner where people can get a better understanding of what's happening, and hopefully in an entertaining manner.
Well, David, thank you so much for your contribution today. And we look forward to building this relationship and keeping people informed as to where the markets have been and are going to. Hopefully, we will hear from David again. And not only from David, but also from some other analysts on the State of the Nation business. But David Bacher, thank you so much for joining us today. And to everybody that watched us, thank you so much. We'll see you again on State of the Nation business. Thank you for joining us.